Good morning, Merry Christmas. This is Ken Long from Tortoise Capital with a review of the daily trading plan and the market health check. We'll start with the health check. This is as of the close on Thursday for SPY. We're looking back 10, 20, and 30 days. And the 30-day regression line slope is steep, as you can see. Very little variation in the last 2 weeks. Price is better than the 20-day moving average, which is better than the 50-day moving average, which is better than the 200-day moving average, and that's the definition of a bull market. The ADX, the measure of trendiness, dipped below 15, and we alerted to that when it crossed back above 15 with green and top of red. That was the indicator of a potential resumption of this long, powerful bullish move here. And in fact, that's what ended up developing. Now ADX is up above 26 and a fraction. And we have a nice bullish intermediate trend move here. So this looks like a nice bull, orderly pullback, and a nice move up. The move from about 122 to 117 is a little under 5%, so that would constitute noise inside of a bullish channel. On the Williams percent R10, we are overbought on the short term, and long term we are overbought on an annual basis as well. So we're well into this bull quiet move. Shifting to the daily report, once again we are bull quiet, and at the high end of normal on the annual channel. Slightly overbought on a 10-day basis. The percent stretch above the 200-day moving average and the slope of the 50-day moving average are both in the green. Very positive, very strong. We're slightly overbought. Strong trending market. And the ATR percentage at 0.66%, as you can see over here, is dramatically lower than it has been in the last 180 days. There are no trends out of the gap stat. And the intraday best average move remains about 2 1/3% inside SPY. As you can see, looking at the 10-day index, we've been overbought for the last 10 days and remain there. No signals in channeling and overreaction. The pivot point for SPY remains above the 123 critical support level, with the pivot at 125.56. Volatility is extremely low and will be that way for a while. The ADX is steadily climbing with green comfortably over red. The leading symbols in the primary indexes you can see under 10-day min pain. And I would highlight the S&P 100 and DBC as the blended commodities among the ETFs. Pfizer, ExxonMobil, Procter & Gamble, Verizon among the stocks in the Dow 30. 10-day max pain, my favorite trading candidates. American Express, Bank of America among the financials. Intel and Hewlett Packard among the techs. And Walmart among the consumer staples. On the ETF 100, gold miners, China, Hong Kong, and Singapore. And that reflects the strength in the U.S. at the expense of the globals. Not too many pattern trades emerged from Thursday's trade, but we do have 551W candidates in Merck, AT&T, and Walmart. A triple screen set up in Silver Wheaton. The Elder Safe Zone channel was violated on the upside to USO and the VIX ETFs, and signaled an exit for Chile in ECH. You can see in the Dow tactical how many components are overbought on a 10-day basis and on a 52-week basis for that matter. Intel remains a target of interest because it is in a 10-day max pain. 3-day max pain is oversold on a 10-day basis, but it was not a percent loser on Thursday, which means that there may be some end to its recent pain. American Express is in the same condition, being an being a max pain on 10-day and 3-day, but not being but not being a percent loser on Thursday. The winners from Thursday, Alcoa, Chevron, and Verizon. So if you're looking for momentum plays, that certainly is of interest. Alcoa is of particular interest. It broke through 15 nicely with a very powerful move, and there's no resistance overhead. So any momentum in Alcoa can be piled on. On the ETF side, you can see a considerable number are overbought on both a 52-week and a 10-day basis, with most of those being in the U.S. You can see how the globals are lagging with the exception of Japan. Percent winners were energy and the commodity complex, except for natural gas, and then the percent losers were financials and discretionary. Summary of the pattern trades, you can see the strength in Alcoa. All systems go on Alcoa. Caterpillar's in pretty good shape too. Intel I like because it's had max pain on a number of these intermediate time frames, but was not a percent loser on Thursday, and it is in fact a max pain range compression candidate that is signaling a channeling and formed a doji. So that's an easy one to pile on Monday if we see any strength in tech and or the semiconductors. Lots of dojis in the Dow. 3 signals on the 551. We saw already Merck, AT&T, and Walmart. And the max pain candidates, max pain range compression, American Express, Intel, Hewlett Packard, McDonald's, and Walmart. Among the ETFs, not very many pattern signals at all. Only a handful of dojis among the U.S. ETFs. Natural gas being max pain range compression. Gold, treasuries, technology, and consumer discretionary. In the Elder Safe Zone, again, you can see only ECH Chile fired on the as a breakdown of its current channel, and USO violated to the upside significantly. Some supplementals, you can see how tightly prices clustered around that regression line. The R-squared indicator at 0.8 confirms what we already know from ADX, that this is a very powerful and orderly upwards move. We've been tracking this upward move ever since it crossed over its own 10-day moving average, and you can see an alert at that location gave us a heads up of the potential for the continuation of this trend that you see here. We're now about 1 standard deviation above normal for the last 180 days, and so we are getting closer to the end than the beginning of this kind of a move. The percent stretch above the 200-day moving average is slightly more than 1 standard deviation to the north. In the quality reports, as you know, I like horrible on 2 months and not so horrible on the 1 month, so that leads me towards 3M in Bank of America. I'm interested in Pfizer and Kraft and Merck because they are exceptionally divergent between the 2 month and then 1 month. You can see from this column here. So I'm looking to reward any one of those 3 that has momentum. In the ETFs, the big winners or the big candidates for that quality reversal, utilities, treasuries, and natural gas. On the positive side, things that we're looking at, energy, you can see up here, has been just dominant the last 2 months, as have been technology and discretionary. On the relative strength between indexes and the market, over the last 30 days, you can see the dominant has been small caps, although the U.S. broad market itself is so strong that there's not much to choose from in between here. What you can see right here, though, is in the commodity cluster, both oil and the blended commodities are significantly pulling away. Gold is making a nice catch-up, too. So this indicates the strength in commodities recently has been broad-based and powerful. And so that's the daily trading plan from Tortoise Capital. Wishing you a Merry Christmas, and we'll see you on the Objective.